Good morning, good afternoon, or good evening, depending where you are in the world. As ever, please say hi in the chat box. Let us know where you're from and your current level of experience. And you will also see numerous links in the chat box referring to people I recommend or articles. And also, TradingView have a special offer on Easter special offer for the next few days, up to 80% off. So if you're interested or you've been thinking about getting TradingView, now's the time to do it. And I think if you use our link, you get an extra $15 off. And I think we get $15 as well. So everybody wins. And I just need to make Ashley a co-host. Yeah, done that. So who have we got with us today? Morning, Adam. Adam in Bali. And Alvin, you're over in that neck of the woods. Clive, never remember if you're the Clive from the UK or Australia. Dan, welcome to you. Henko, South African name. João de Siqueira, probably Brazilian, Portuguese, I'm guessing. Julian, UK. Majid is from Leeds, my hometown in the UK. Rich, UK. Sasha from Germany, I think he just said. Yeah, hi, Sasha. Zoe, English lady who lives in Perth in Australia as well. It's going to wait a little bit longer this time because last week it turned out there was 20 or 30 all suddenly came in at once, and I think Zoom was playing silly beggars. Um, Ashley, are you
Mark,
it? Are you there? Yep.
yes, I had a question as well, which you can go through later. So
Okay.
basically, I've seen a lot of members telling that they want to short the dollar yen, and specifically around the 50% fib, which is around 146.80.
Okay.
And if you can look that pair for me as well,
Okay.
because I'm finding it a bit hard to see anything in that area. I know there's like I think there's trend lines and a Fibonacci, but the 55 on the 4 hour is a bit lower down. So for
Okay.
me, I don't really know what I see there,
Mhm.
but a
Well,
lot of members are seeing it. So
okay.
maybe this one you could look at.
If in doubt, stay out, obviously. But yeah, remind me as we get going.
Yeah.
Hopefully, can you see my screen, guys?
Yes, Telegram.
Yeah. So just today, I'm going to be showing you going through bonds and stocks and crypto and gold and this crazy new high yield interest program I've been trying on a live account. And just basically to show you that I am still active and still buying things, even though the markets are spooked. And so this was a recording, I think, from Mentor Pro when we were talking about how to survive and thrive a crash and also the crazy high yield introduction. So if you're new or you haven't seen it before, go back into FMP, into my other blog, and check that out. And then I was talking on the April 11th, 3 or 4 days ago, that obviously the bond market had spooked everybody, which is why Trump backed off in the end. And I was explaining that I bought some more miners, and my mining stocks in general in the last 2 weeks are up about 20%. So it was still not too late to get join the party. And I also bought some crypto, and I'm going to be explaining a bit of that in today's session. And then the high yield ETFs on my live account, we'll go into that in detail in a moment. Basically, I have received from the 8,900 I've spent so far, I have received as much as if I had put that into a conventional SCHD, Charles Schwab interest paying ETF. I earned as much in 1 month as you would in 12 going the conventional route. So I just said here, if you had 100K in, and even without reinvesting the dividends, which I am, 100K would yield at current returns $43,000, which is why I'm testing it. Because what I explained before is that I was looking at if you had, it needs $1 million nowadays if in your pension fund. And I think the average in America and the UK now is around $100,000 is the amount in an average private pension. So those with 100 less than 1 million are going to struggle with conventional means of investing. So this gets really interesting because with 100K, you would be looking at 43,000 a year return, which is nuts. And I am thinking for logical reasons, I think I'm going to put some more money into this as well as because I'm going to go through that with you today as well. As ever, if anybody has any questions, stick them in the chat box. YAF members, I'm going to do a detailed update in the next few days. As soon as I find time, I'm going to do that. And again, some of these are from Mentor Pro as well. And I was explaining about the high yield. So the bottom line is, as with trading, FX and everything else, there are still ways to make money at the moment. Sometimes you need to be more careful than others, and sometimes you have to think out of the box. So these are those yield max ETFs, and the rates of return at the moment are down a bit, but that's to be expected because the portfolios really do best when things are going up. And I'm on the wrong page here now, I think. Where's it gone? We'll scroll at the top. It was working fine 10 minutes ago. So on here, if you go onto yieldmaxetfs.com, the distribution rate at the moment on Tesla is 72% per annum. I am not buying Tesla because I don't think Tesla's in a very good place at the moment. Zoe, I don't know if you sat through all this and still holding firm, or have you sold some, taken some profit on your Tesla? I noticed Musk came out the other day and started talking about robots again. And I said a few weeks ago in a live session that that's what he's going to have to do. He needs now, realistically, I think, in view of the fact that the sales in Europe and the UK are significantly down, and I was told in Australia the other day as well, then he needs to really bring some of these robots to market, and also the idea of driverless taxis, etc. But these are the returns that it's paying on individual ETFs at this moment in time. They do not buy the underlying stock. If this is new to you and you're a YAF member, then it's all explained in a new mini course in there. And in FMP, I did go through this in previous live training sessions, and you can find the live training sessions. We had some questions from a few new people have come in about finding things, and there is actually a video on the homepage. It should pop up when you first sign in, but once you've signed in, if you just want to go watch this again, this will show you where you can find everything. So recent posts and everything in the education area. Live training sessions get put in here, and also live training sessions go in my part of the live training sessions goes in my investing analysis. So I was talking last week about Trump crash. My portfolio is up, and that is because I have been buying gold since 2022, and also because I hedged my yield max portfolio as well with some options. So all good under the hood for me at the moment. So this is the payouts that they're paying. This is Coinbase, Netflix. These are all related to the stocks, but these are synthetic call options. So they're not actually buying the actual stock. So it seems nuts, it seems crazy, and yet the more I'm involved in it, the more it does make things very interesting. Hi, Suzanne. I sent you a reply to your question the other day. You should have received an invoice. Did you get it? Or I wasn't sure if you got the email or not. Just let me know in the chat box if you can. Indy says, with YieldMax ETFs, is knowledge of options required? Not at all. They do it all for you. So no, you don't need to know anything. I am learning options at the moment, but that's the whole point of this. And this would be far too complicated and far too time consuming to do this yourself. But you can see the different returns that are popping up on here. MicroStrategy at the minute, 87%. So this is the subtotal at the moment of what I have got. So I have now spent, I started buying on the 10th of March. So I bought the first bunch on the 10th of March. And then between the 19th to the 9th of April, I have added some more. In total, I've spent $8,900 on my Tasty Trade account. 500 of that was not actually one of these yield maxes. It was an ETF that is tied to the Russell 2000. But anyway, I've taken the whole as a total. My dividend yield to the 14th of April. So the dividends started to pay out, I think, about the 20th of March. And so within a month, I have received thus far $328.65. If you took that on 100,000 account for the year and without getting complicated and reinvesting the dividends and everything, that would give me a return of somewhere around $43,000. And then if I put the same amount of money into Charles Schwab in the last month, my 1%, you get 1% a quarter with Charles Schwab, it would have paid me out $29.72. So hopefully you can see the difference. And when you go on to a year, it makes a massive difference. Schwab is paying out 4%, and this is paying out 10 times. So one of the comments then from people is, well, the NAV is down, so the net asset value is down. Well, everything's net asset value is down. So that's one of the comments I put in here. But then somebody gave me a really good analogy the other day, and they said, look, if you bought a house 20 years ago and you've paid for it, and the mortgage is paid up, and you're now receiving income because it's paid for, would you be bothered about it? And the issue with the house would be if you suddenly needed some money, you would have to sell the house, the whole house. Whereas the advantage with this is you could just sell a bit of it if you needed some cash. So that's the way I'm looking at it. And I say on top of that, I bought 2 puts on the NASDAQ and for $900, which is my insurance policy against everything dropping. And I am cost averaging in. I have added bits so far, and I'm going to add some more today. And this put on the NASDAQ also is covering more than just this. So all of that was good. And then these were some stocks that my missus put in the wrong account. So this is Charles Schwab, US dividend equity. If you wanted to buy Schwab at the moment, it's not a bad price. It's about 20% down on normal. And if you're not into all the high risk, scary stuff, then this is one of the ETFs that lots of people are content to put their money in. Personally, I don't want to have $1 million to pay me 4,000 a year. I think that's a shocking return. And I showed you this the other week. This is the Aristocrat stocks, and the top one pays out 7%, but the average is paying out less than 3%, but let's say 3% to be generous. And even some of the big boys, Coca-Cola these days, only paying out 2.82%. So I've mentioned before, for me, the days of relying on dividend stocks, my original plan a few years ago, that was it. Make a load of money from crypto and gold and then just put it into dividend stocks and go sit in my yacht. And now I'm not going to do that because it seems pointless to me. So these are some other high yield stocks I've been looking at. And this one, for example, this one is XYLG. And the reason I'm showing you this one, this is from 2021. And this one has gone up and pulled back, very similar to a stock. And in actual fact, this one, even more so, this one's been going about 4 years. And it had one of them had a COVID crash. No, this is too soon. Yes, it's been down, but it doesn't matter in effect whether it's going up or down because it's still paying out a dividend. But it performs best when the stock market is going up. But in that case, had you bought this a year ago, your asset would have been up 80% at its peak. And even now, even after the crash, came down to 42. And what's also interesting, notice if you start using TradingView and you look at all the different things, what did it do the other day? It bounced to the pip of the 200 EMA weekly, which is why we use these EMAs. Now, I have an alarm set here. I haven't bought this one, but I have an alarm set here just to let me know if it gets further and any further down as well. And you have the monthly 55 just below. So just an alternate way to look at things, not financial advice under any circumstances or stretch of imagination, but something for you to consider. And this is XYLD. This is the one that's been going longer. Came down with the COVID crash like everything else and recovered like everything else, and then has since gone on fairly decent run and then the pullback. So just as I say, not financial advice, and it's not for everybody. But it's for me, it's worth putting a bit in there just to see how it will go. And this is one of the covered calls from GBPAUD. This is the ones I've just been showing you. And this is an S&P 500 covered call and growth. And again, explains in here what's going on and explains the trailing 12-month distribution around 23%. Any questions on that so far? I was okay, Suzanne. I wasn't chasing you for that. It's just I didn't know if you'd received the email or not, because I know you were asking a week ago and you seem to be in a rush. Yes, they use puts and calls, Zoe. So if it goes down, they're covered as well as. In fact, it's explained a bit on here. They have a short S&P 500 call, a big one that on this one that is closing in a couple of days. So long and short, you are covered and can make money, but they make more money when they're going up. So, what has been going on? And no friend of Trump, CNBC, but they quite rightly say that Trump dodged a disaster from the bond market and potentially that the damage isn't over yet. And they're quite right. The reason why he changed his mind the other day was said people getting a little bit twitchy. It was more concerned because the bond market could have broken everything. And although I understand to a degree what he's doing and why, nobody can fight the bond market, and it is having knock-on effects. It had a knock-on effect for Liz Truss in the UK. She was the shortest term prime minister, I think, in history. I think it was 47 days. And she tried to do similar things to what Trump's doing without fighting everybody. She wanted to invest to expand, and I think it actually wasn't a bad idea. The bond market didn't like it, and between them and the Bank of England, they got rid of her. And she was interviewed recently and said, when you want to know where the real power is in the world and in a country, it's not the one at the head of the food chain, i.e., when she was Prime Minister, she was sacked, whereas the head of the Bank of England is still in there. And he was put in there, promoted upwardly because he was hopeless at his previous job, as I've mentioned before. I just need a quick drink of my tea. So the bond market is very dangerous, and Liz Truss is now, I think, residing in America, saying, "I told you so." So she's explaining all of that as well. And then in here, the implications of it. This is one of the links I put in the chat box. I do pay for this one. I think actually I can give a subscription. So I'll give a subscription. Oh no, I can have to buy the one. I thought it was one of the freebie ones. There's a limit to my generosity. But what he's talking about here is how the Treasury yield and the trade weighted index was going in opposite directions. But the big thing here is how much money is held by foreigners in the US and particularly China. And so, as you can see here, US Treasury holdings, 7.2 trillion, agency bonds, corporate bonds, equity investments, long-term securities, bank deposits, etc. So, and this is the source comes from the US Treasury. So the point is that there was a rumor going around that China were deliberately dumping bonds to hurt Trump, which is a possibility for them because they were the largest holder of bonds in the world at one point. On the other hand, they would suffer as well because it would bring the price down. And then in here, the FT, what's the knock-on effect of this is companies also issue bonds, generally to professional investors, but they will pay a higher rate of interest than a government bond because it's higher risk. At the moment, they are not able to raise money, and some of them will have bonds that are coming due for repayment, and they need more to keep the ball and keep the wheels on the bus. So another thing. So I'll put lots of these links into the article so you can have a read of these at a later date. And then some of the links that I put into the chat box. This guy, I don't pay for this one, but he's talking about how the weakest credit dies first and the state of the credit market in the US. I know JP Morgan the other day, the bank was saying that defaults on credit card debt is getting higher and higher. And so that's a concern. This is a guy I've recommended before. It's free. And again, it's in the bubble or something it's called. It's in the chat box. Very, very good analysis. This guy actually called the recession in the UK in 2008. Well, I think he's when he was still at university. And again, remember, I talk all the time about trying to catch the right cycle at the right time. And that's what he was talking about here. So, as I've explained to you many times before, from 2012 to 2024, stocks were the best investment to be in. But as I've shown you many times before, from the crash in 2007, 8 to 12, gold was the better thing. Well, gold started to outperform stocks in March of last year. Now, thankfully, we got into gold in 2022 when it was half the price it is today. But this shows how gold now and the Dow is going significantly in different directions. He believes, as I do, that there is still a lot more room for gold. And one of the reasons why he believes that, oh, this is interesting. So this, I just said to you about what went on in the stock market. This is what attracted me to share this with you today. So the 1930s, after the financial crash, 1929, the Great Depression, it took the stock market till 1942, I think, to recover in America. And America's stock market and industry really recovered when they started making weapons for the Brits for the Second World War. So this is when gold, stocks outperform gold, then gold outperforms stocks, and then you have it again. Stocks outperform gold early 1980s, early 2000s, dot-com boom, and then gold was stronger. And then again, we've now got from the mid-20s now. So be mindful, this could just be the start. And I do think that that is the case, certainly for the foreseeable future. But as ever, I could be wrong. And the reason why he thinks it could be the case is the Chinese are going nuts on buying it. And there are a number of reasons for Chinese investors to be buying gold. Anybody got a clue for one of them at least? Tell me a reason. If you're a Chinese citizen at the moment, why would you be thinking of buying gold? What's happening in the Chinese economy at the minute? Even before Trump's tariffs. Come on, join the dots. Nobody? You lazy lot. Ashley says stocks going down. Well, partly yes, but the main thing is that the construction industry and housing in particular has collapsed in China. Now, obviously, with the tariffs, there are a lot of factories wondering what the heck to do because there's no point making stuff if they're going to have a 125% tariff slapped on them. And they are starting to fight back at the Chinese as well. Whereas I think gone are the days where people just suddenly think, oh, well, they just make stuff for cheap and the workers are getting paid peanuts and things. I read an article this morning from a Chinese manufacturer, and he was talking about a product that he would make that perhaps after paying wages and everything else, he might make $1 a unit. He actually said 50 cents. $1 a unit. By the time they've paid to transport it to the US, and they paid for the shipping, and now if they were to pay, but even without paying the tariff, by the time it gets to America and then it gets moved on to the likes of Walmart, and Walmart then basically stick 100% on for their profit, they are the ones making the money out of it. So the counter argument is, I do understand where Trump's coming from, and he's been talking about this for 30, 40 years. So it's not a new thing. What his bear bug is that for decades, and his Lutic, is it? The one of the finance guys said this the other day, that they're sick of the Chinese stealing their technology and then selling it back to them. And it went on for decades. We know that it went on, but maybe now it's too late for that because some of these Chinese factories now are very well run and they may be able to afford not to deal with America if push comes to shove. So if you're a Chinese citizen and you've got cash and they traditionally save rather than go into debt, then where do you put it? You can't put it into property if you're thinking of renting property out because the market's collapsed. And then the ultimate safe haven is gold. And so that's what he's talking about in here. And then he's talking about traders as well. So have a read of this article. It's free. And I've put the link for you in the chat box. And again, this guy does, I don't know why he's doing it free. I really don't. There's going to come a day soon where you're going to have to pay for it. I do pay for it. And I think it's about $8 a month. So it's peanuts. But really, really good research. Lots of data and lots of knowledge from somebody who clearly knows what he's talking about. So, as ever, I started every day. I look at what's going on, and clearly the dollar index now we've broken 100, which is a massive area of previous support and resistance. So let's bring that down to here. So there's your 100. We've broken that. Is this going to be a rebound? I have no more idea than you, but when you look to the left, it has been a massive area, and it's parity in effect. Excuse me, I'm just going to cough. Hang on. So major, major, major area and a psychological level as well. So I wouldn't be in a rush to just sell the dollar on the strength of this just yet, because the probability, the likelihood of at least having a rebound is greater than not. I have a question from Dan saying, do you ever trade gold CFDs? I leverage gold down by using stocks, and I'll show you that in a moment as well. So then we have the pound. So the pound, the British economy is doing great. The pound's going up. No, it's not. The pound is going up because the dollar is so weak. And that has also helped the price of gold because gold is being priced against the dollar. With the pound, 130 is clearly a massive area of previous support and resistance. I have the 50% fib now at 129.80. So an area to be considering and certainly to be watching for multiple reasons is the pound, but you would have to go down to a 4-hour to find the 5 reasons. Similarly, for the euro, 112 was a major area of previous support and resistance. We were hoping last week for a pullback to 110. Once again, if you were going to trade this at the moment, you would have to go down to a 4-hour. Now, Ashley asked me to look at the dollar yen. So, as ever, if I'm looking at something, I always start with a weekly. I want to know what's going on. Clearly, we've had 2 significant down weeks after all the kerfuffle. 150 would still be the main area for me. And when I look at this on a daily as well, I would still be thinking I'm going to fib from here to here. And so, oops, upside down. So 78.6 fib, all the rest of it, 150. This area here would be where I would be interested for the dollar yen. If I go down to a 4-hour perhaps, or with Pierre with his Earth and Sky, you might start to see things. But I missed the dollar yen when it broke higher last year. I missed it and I just left it for months. And then in March, I had 2 really good trades on the dollar yen. So once again, I am willing to wait. And at the moment, you look at what's going on here, it's consolidating and it's just in a very tight range here. And that range is 140, 200 pips. So it's still a reasonable size. Okay. Can't buy it here because I don't have multiple reasons. And at the minute, I don't have multiple reasons here. If I'm trading it on a 4-hour though, I do need to now fib it from the 4-hour. So I could fib from there and still the fib doesn't help me. So in answer to Ashley's question, no, I don't see it at the minute. NASDAQ trying to rebound, as is the S&P and the SPY. What's concerning here on a technical note with a lot of these, I noticed, I think it's more on the SPY this morning. No, back onto daily. We are getting to the verge of a 55-200 cross. And sometimes these crosses are known dramatically as death crosses. But if we get a cross, like we've just got on the NASDAQ, if this doesn't break back up again in the next few days, then the bias continues to be to sell. And so, for example, here, you would start thinking of a potential move back down. So it has to break above 20,000, whole number, major previous support and resistance, and now these EMAs to negate the current start of a downtrend. Euro stocks, UK stocks, Nikkei. So I look at all of them on a morning, 10-year note, 2-year note, and then gold. So gold, as you know, we started buying it $1,700-$1,800 2 years ago. As we just pointed out, it's the start possibly of a super cycle. I said the other week I would be a buyer again at 30. And also I think we bought some more at, oh no, it was silver. I bought some more silver cheaper. So again, you fib it and you look for major previous support and resistance areas. And clearly 3,000 is a huge area on this one. Silver, I bought more silver in recent weeks here, here, and here. And I said the other day to my Telegram group, I would still be buying silver because of the 2, it still has a greater technical percentage. Now, Dan asked me about ETFs. Yeah, I use leverage for Forex, Dan, otherwise there's no point doing it. Okay. If you want to know with the leverage, you just go to my FX book, which is here, and for the calculator, let me put this in. And then you can put in here, it does it all for you. You can put in what your currency pair is that you're wanting to trade, your account currency, account size, and then it will calculate it all for you. So back to where I was. Where was I? Yeah. So In answer to the question, Dan, this is EXK, shown it lots of times. Silver went up 40% last year. This went up 260%. I bought again the other week down here. And so we've just seen silver at the moment is at a low. It's kind of slowly trying to make its way up, but that has made 25% in 4 days. And this last time I say made 260% because from January last year when we bought near the COVID low, that's how much it went up in 10 months. So I use mining stocks, and I showed at the beginning here. Let me show it again. I bought some more the other day of, where has it gone? EXK, the one I've just shown you. I also bought some more AG, and I also bought some more BVN. And I said to folks 3, 4 days ago, I'm only buying miners at the moment when it comes to stocks. And then I did buy a bit more crypto. So that's what I'm doing, and that's why I do it, because this gives you leverage on stocks without leverage. And I never, ever, 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 ever use leverage on crypto because that's nuts. So, why is Trump doing this? Well, if you have a look back on YouTube, there are clips of him being interviewed on the TV in the 90s where he was really riled about China. And I say he was riled because lots of American companies and European companies had their technology stolen by the Chinese, and then they were selling it back to them cheap, and they were taking the mickey. And as I think Lutnicky's call the other day rightly said, nobody said anything. It was just like, oh, we better not upset them. But I think perhaps he might be too late this time. So this is an article going back, and this is from 2017 when he was talking about 10 times the attack China. So this is not a new whim on his behalf. This is not something he's just suddenly come up with. This is tweets from 2013. China is the biggest environmental polluter in the world by far. They do nothing to clean up their factories and laugh at our stupidity. And he's right. And that's as relevant today in the UK as it was then. We have a clown in charge of the energy department where everybody's paying more for fuel than anybody else in the world. And the idiot now, they've just had to order coal from Japan, whereas the clown in charge of the UK energy closed the last coal mine last year and was celebrating on Twitter. So for me, a lot of what Trump has to say on the subject of China is true. And he was saying here, they're neither an ally or a friend. Devaluation of currencies. So the other thing, going back to this thing about why are the Chinese putting money into gold at the moment? The Chinese Communist Party, the government, are devaluing the renminbi to fight the tariffs. So again, the value of their currency is going down. When the value of a currency goes down, investors rush to gold. So there is still the potential for gold to keep going higher. So all of these comments on here, as I say, he's been consistent on this subject, but as we said, it was the bond market that made him have to back off. And then here they're saying that China holds the cards, and this article here. So there've been some memes put on Twitter where they're taking the mickey out of Americans. Americans are not going to start factories making clothes because they simply can't compete, and they can't compete on the labor market than anything else. What Trump is trying to attract back to the US are big brand companies with high levels of technology. That's what he's after. And he also wants companies like Facebook, etc., who've been sheltering in Ireland, paying low taxes, that they should go back to the US as well. But in here, this article, and again, I'll share this. I think you'll be able to read this. I have a subscription to this. There is an article in here somewhere where one of the Chinese factory owners is explaining what's going on. So this is Tim Cook, not looking very happy. This was inauguration day, and the fact that this was from the 14th of April, this is yesterday, the damage that the tariffs are having with Apple, because Apple still has a substantial part of its manufacturing based in China and Vietnam. The flip side, they reckon that an Apple iPhone that might cost you $1,500 at the moment might cost you up to $3,000 if it was made in America. And then, but what it is doing, having a positive effect, which is what Trump is after, is getting these companies to build factories to manufacture in the US. So Apple has agreed to spend $500 billion. Nvidia, a guy from Nvidia the other week, Jensen Huang, he was out for dinner apparently at Mar-a-Lago. He's agreed to build factories there as well as. And what they're trying to do is get away from the dependency on chips, because one of the biggest chip manufacturers in the world is Taiwan Semiconductors. And if China moves into Taiwan, then America would struggle to get the chips, which is again why they want this technology, why they want to be independent of China. And now this one could really rock the boat. One of the ETFs on YMAX is for Moderna. I personally won't buy them on principle, no matter how much it might make me, but it's not going to be good for pharma companies. Having said that, they're talking about putting tariffs on India. India makes the vast majority, I believe, of non-branded drugs in the world come from Indian factories. So you would think, well, the pain that that's going to cause, no pun intended, but to American consumers of pharmaceuticals, I don't know how long he's going to be able to maintain that one. This is the FT this morning, and again, this is where I got the article about the corporate bonds are screwed as well as. Now, what else could go up? Well, another part of the thing with Trump wanted a lower dollar. He's always complained about the dollar being too high. So he wants a cheaper dollar and he wants interest rates to come down. He's made it clear that he is no fan of Powell at the Fed and he wants Powell to reduce interest rates. Thus far, Powell has not reduced interest rates. If this chaos continues for much longer, and now that the consensus is that there will be 3 interest rate cuts this year, and one of the Fed ministers came out last week and said, we will do whatever it takes again. If they start printing money again, or they start quantitative easing, same thing, and cutting back on the limitations that they've been doing, and they reduce the interest rates, traditionally that has been good for crypto. So again, I said to folks last week, I was buying a bit of crypto. And on here, that's the use to sale. Save yourself up to 80%, as I just explained earlier. Links in the chat box. Use the chat box link. And on crypto, so Bitcoin is at a very interesting level again. I mean, it's consolidated. It held at 76. I actually bought some more at 76,500, I think it was the other week. Not massive amounts, but bought some. But if you look at Bitcoin at the moment, it is at, again, a massive area. Make your mind up area. So we've got the 200 and the 55 and the trend line, and it's rejected here on numerous occasions. The 55 is starting to roll over. If this goes, it could pop back to 100 again. So this is make your mind up time. Ethereum is getting battered at the moment. I can't remember if I bought any more Ethereum. But what I did buy the other week on the Telegram I sent out, I bought a bit more of HBAR. Again, this is early because it's not broken the trend line and the EMAs. But notice this confluence is building again. The safer way, if you were going to buy anything like this or anything, whether it be stocks, crypto, or anything, the safer way is to wait for the breakout and the pullback, M2 style, that we normally do. I bought a bit in here the other week because it was consolidating. I also said to folks I was buying a bit of Solana because it was consolidating and it's cheap at the minute. I bought some XLM and I bought some more XRP at I think it was at $2. These 4 are part of my main portfolio. And the reason I started, Cardano was the other one actually I bought some more of as well. The reason I started to buy these again when Trump got re-elected, this was what this move was all about. This was to do with American crypto. And there was some news yesterday about progress being made. The SEC have dropped most of their cases against MicroStrategy, but they've dropped most of the legal matters against most of the crypto companies that were being done nefariously, I believe, by Biden's mob under Gary Gensler. But there was talk the other day that within the first 100 days, Trump is well on target to come up with a regulatory body that would work. And the other advantage for Trump with crypto is to buy crypto. Generally, you need to convert dollars into stable coins. The stable coin companies have to have US bonds. So going back to the bond market scenario, it's beneficial for the US if more people come into crypto using the stable coins, because that then means that the stable coin companies have to buy US bonds for their treasury. So again, understanding how all of this lot is interlinked and how it all works jumbled around, this is what you need to pay attention to. MicroStrategy is coming back up again. It's broken the 55 just. We're back at a trend line again. Again, if Bitcoin pops, expect MicroStrategy to pop. And where it was last time, recently, it was 35% higher, and the all-time high was 66% higher. And this is the one we originally bought, $30 a year or so ago. Coinbase is another one. This is the broker in the US. And once again, consolidated around the 200 EMA. CCJ, I am interested. I think I might start putting my toe back in the water to buy some uranium ETFs as well as at the minute. In general, that's for shorting. Berkshire Hathaway back up to where it was the other week. And again, said this many times before, why was he sat on $350 billion in cash? Because he was waiting for a crash. And then it's another one I've shown you before. This is a gold ETF, too expensive now. That was the M2 buy there. Major previous support and resistance. That was in January of this year. And that is up 40%. So for those of you who don't want to do all the work for yourself, then an ETF is something to consider. Personally, I wouldn't be buying it at the moment. Taiwan Semiconductors, remember, these are responsible for a lot of the chips that go into US production. That could be a death cross as well. Darth Vader time. Tesla, as I say, I never caught this and I've not got it on the way down. On Yield Max, I do have, I think I've got $300 or $400 worth now of Tesla long and short, but he needs to do something, does Elon Musk. And clearly they're suffering as well with a lot of anti-Trump, anti-Musk rhetoric as well as damaging cars and burning down showrooms and everything, all the other nonsense that's going on at the moment. So a rush around the financial world. I have some Google and App. I didn't buy Apple. Again, for the reasons we've just been talking about, I have bought some Google recently. I have also Yield Max version of Google. Bought some Palantir at different levels. I bought some Meta, and I bought some Nvidia and some Microsoft and some Amazon. Not a lot, and I'm not massively into mainstream stocks, but at the moment they're down significantly. And as long as I can see that there's a potential to make 25% up to the recent high, I'm willing to buy. And mainly why I'm in this lot, longer term AI, this lot have got big projects, not quite as much with Palantir, but the rest of them have invested a lot of money in AI. And and when you look at the computing that goes on with it, quantum computing, they're also heavily involved in that. So the quantum computing and the way that technology is progressing is insane. I suspect that may be the next cycle. So I am looking at some of the smaller ones at the moment. Been watching them for a while, the more speculative ones that maybe could be 10 baggers for the future. Any questions before we go over to Ashley? If there's anything else on here we wanted to look at? Julian says, I can't see any links in the chat box. Hang on a second. Are they there? Right at the beginning, Julian, if you go right to the top of the page, can somebody tell me if you can see the links in the chat box? Right at the top, if you scroll back.
I can't see any links, Mark. I only see the MyFX book one.
Right, well, hang on a second. Let me get them again. Where the heck did they go? How strange. Right. Let's see if it let me put them all in at once, or whether I'm going to have to do it one at a time. Maybe it was because I did it before the webinar started. I thought I was being clever. Can you see them now? Somebody, can you see the links? Yes, sorry. Thanks for pointing that out, Julian. Yeah, the Bubble is the free subscription. It's great if you've any interest in gold and metals and general finance, but gold particularly, that's good. Alistair McLeod is, you could sign up as a free member and you get some content. Again, he's been in gold for 50 years and he knows it inside out, and he lived in China for 20 odd years, I believe, as well. Jensen one is a freebie as well. Good general financial education. And TradingView is the link for the 80% offer if you fancy using TradingView.